Money in London with Mr. Rick Rule. Rick, thank you again for joining us today. It's always a pleasure to speak with you.
My pleasure, thank you.
So what are your initial thoughts, or what are your sort of overall impressions of the conference here, but also, the 2018 in the mining sector?
Well, the mining sector, in terms of the responses of the equities, has been a challenging year, like the years that preceded it. The truth is that at Sprott, we're as much lenders as we are equity participants. So it's been a mixed blessing for us. On the lending side, all through the downturn, we made very high rates of return as a consequence of the fact that equity was less available. So for us, a bear market is sort of a blessing in disguise. And actually for your investors, a bear market is a blessing in disguise too, because there's less competition to write good checks to good management teams. Yeah. Remembering, of course, that bear markets are always the authors of bull markets, but they certainly test people's patience.
Yes, they do.
As for the conference, I think the mood here is tepid, which I think is extremely encouraging. You never go higher in a situation where everyone is bullish because everyone is already invested. By contrast with the conference, I have been circulating in the City of London raising money for our second institutional lending fund and for a London-listed trust. And I have to say the reception for mining investment generally, for strong management teams and strong projects, is very, very strong, which is encouraging.
Well, we've been in a bear market for quite a while now, but we always say, oh, that bull market is coming, or at least an uptick is coming. Any sense of that in 2019? Any signs of that?
I think you're seeing signs of strength now, frankly. Exploration budgets among the majors are increasing. Some of that money will trickle down to the juniors, and some of the juniors will do a good job for it. Interestingly, good exploration results are starting to get bids. There was a point in time, 2015 is an example, where when somebody would demonstrate a good exploration result, the stock would go down. People only owned them to sell them. There are bids now. There's not the type of money that the industry would prefer, that is to say easy money or dumb money, but that's probably helpful too.
You mentioned you're here raising some money as well for your next fund. What are you seeing in terms of the demographics of your investors and those people who are interested in mining investment these days?
There is a barbell, if you will. The London institutions and the great big U.S. endowments and pension funds like mining as an asset class, particularly because it's beat up. So the biggest of the big investors in the world are looking to re-enter mining. At the same time, in our retail business in the U.S., we're beginning to see the generational shift that we thought would happen 15 years ago that didn't. Specifically, you may be amused to hear this, we're seeing an increasing incidence of young female investors, which was never anything I saw in the mining space growing up. For years, the mining community looked like me, old, fat, white guys. Interestingly, there's a younger demographic, a female demographic. That female demographic, not surprisingly, I guess, if you thought through it, is to a surprising degree South Asian, Indian, Bengali, Pakistani, Sri Lankan, US-based certainly. And it makes sense when you think about it. Young professional women that have investable capital, that come from a cultural background, South Asia, where they're philosophically predisposed to gold. It's useful to me in that I was wondering when the demographic would ever shift, and as the demographic shifted, how it would shift. And that's well underway now.
Are you finding that we're, speaking of sort of that younger generation coming into mining, we've obviously seen the rise of cannabis stocks on the TSX over the past few years. Are you seeing a competition between cannabis and mining stocks for capital?
For the dumb money, sure. I mean, it amuses me to see management teams in Canada finally being involved in a commodity that they have first-hand experience with, which is cannabis. Good riddance from my point of view. They're very different types of investments. One thing that you do see with investors of all ages is that their interpretation of what the future will look like is set by their experience in the immediate past. So you have a situation now where the cannabis narrative has been justified by rising share prices, which is what's happened 3 or 4 times in my career in the mining business. This too will change. of course. Is it sucking capital out of the mining space? Only the kind of capital that we don't need, the momentum-oriented capital. The truth is that they are very, very, very different styles of business. The cannabis business will end up being a branded goods marketing business, and the type of investor or speculator in a branded goods marketing business is one that will have a very different perception and a very different range of expertise compared to a mining stock investor. So I see them as two different universes.
Well, Rick, we know you love gold. We know you love precious metals. Do you have any companies that you're watching now that you can share with us?
You know, this is an easy point in time to have that discussion. Normally, I shy away from that because in a bullish circumstance, when I'd say something, everybody would run out and buy it. The truth is, I'd like to start by saying there are three categories that we're attracted to. The first is takeover targets. We see M&A coming into the mining space in spades over the next 18 to 24 months. Without naming any specific names, it's pretty easy for people to figure out. There are probably 40 companies that are going to be taken over. We will, as a firm, that is Sprott, be able to talk more specifically about our favorite list in probably January or February. We have a 40 company list that we're trying to nail down to sort of 7. The second space, and I'll name a couple of names here. The second space are the royalty and streamers. Many people in the market think they're overpriced. We don't. We think their prices are justified because they operate in 65% operating margins relative to 14 or 15% operating margins in the operating space. The other criticism is that they can't grow. We see streams as an important part of the capital stack in mine financing, so we think they can grow. And there you'd be looking across the range at names, but certainly Franco-Nevada and Wheaton, which are down substantially but are high-quality names, are worth people looking at. Among the smaller names, the London-listed Anglo-Pacific is a name that we are attracted to, and Sandstorm, the Vancouver-based Canadian-listed company, is a name that we're looking at. And then coming much further down the size scale, we see a resurgence in exploration like the market hasn't seen since 1991 or 1992. The part of the exploration sector that we like are the prospect generators, the people that use their commercial and technical acumen, put together exploration plays, which they then farm out or joint venture to other participants who put up most of the capital. We look at exploration the same way we in California look at technology, as a research and development business. And so the superb technologists, if you will, are the places that we like to play that game. I'm leery about naming names there simply because they're so small, but certainly some of the bigger names that one could play in that space would be EMX Royalty or Altius Resources. It's a theme that's worked out very well for us in the last 35 years, and we really think we're coming back into the sort of dawn of exploration again.
Absolutely. On that note, Rick, it's been a pleasure speaking with you once again. Thank you so much for your time.
Pleasure was mine. Thank you.